And
Oh, okay.
and they were looking for an explanation. I said, if it sounds to me like they might have had collars on, and as long as the market was, long call, short put, and the gamma's highest at the market, which means the market's now coming down to the point where they have exposure on short options.
Yeah, that's one thing they usually do.
Yeah.
Fund managers, especially those total return fund managers, one strategy they use a lot is collar. So they replicate the S&P SPX index, and then they turn the backs on the SPX options market, and they sell calls on that, and they buy puts on that.
So then the market would be moving up to where they sold the calls, which would turn the gamma negative.
Yes, and it will explode higher because now they have net short exposure. They have to buy, let's say, the spoos to hedge their delta.
There you go, Judd. That's great context, but it fits exactly what we said yesterday with specific examples there, which is good.
Yeah. So basically,
Perfect.
everybody was looking for this in tech, right? So it was Gamma versus Nasdaq. So you're seeing all these Nasdaq names going to the moon.
Especially Tesla. I mean, it hurt them so much. Tesla. Those one day 8%, 10% moves. Nobody can sustain that kind of loss without hedging their deltas. So that's why you see, okay, if Tesla comes right out of the gate 4% up, you'll see it just slowly crawling higher every day, the whole day. Because if it rises more, they will have to buy more Tesla shares to hedge their delta because they're short calls on that. That's why Tesla has been a one-way train, because the gamma hurts them so much. I have clients that sold calls back in the 1400s.
Oh.
But he has stock, so it's not that big of a deal for him. But I mean, if anybody that's only trading options without the underlying, wow, that would be hell.
Well, now we know. Oh, I
And
appreciate
Apple
it.
too.
Yeah.
Apple, it's one of the widely held issues in the market. So when fund managers, they sold calls on Apple, well, in order to get more, in order to not let their gains capped in Apple, because if they sold 450 calls in Apple, now they have $37 gains that they couldn't put their hands in, right? So what they will do is they will roll the calls out. Let's say 450 rolls to next month's 460, and then they buy more stock. That's what they will usually do. So that's another aspect of why Apple has been going up every day since they announced the stock split. But everybody on the street, the media's on the street, are looking at Robinhooders. But come on, man, that's just a peanut, The total asset under management in Robinhood, it's under what? 400 million. Total assets held under Robinhood's management is under 400 million. That's peanuts. You know what TD Ameritrade held? Almost $1 trillion. So that's a stark contrast. And I don't know why media is going after the Robinhood guys, because certainly the market isn't propped up because of them. TD Ameritrade and Schwab, they merged. And Scottrade as well, of course.
Wow. Sean, TD Ameritrade.
All right, gotta go, guys.
All
It's
right,
been
thanks,
a
Michael.
nice
I appreciate
conversation.
all the color.